For high income earner individuals, they are PAYG working for another company. It's not their own business, nothing like that. They come to you, they want to ask you that whether it's worth to go for a novated lease through their company, through employer, or they go on lease. They get a car loan elsewhere. So what are the tips there?
Okay, there's a couple important things to consider because of the complexities of fringe benefits tax and the way it calculates things and compares. A novated lease is one where your company will own the car and they novate it across to you. And you need to compare that with own leasing or owner leasing. So leasing a car, buying a car in your own name and leasing it to the company that you work for. They can have a number of different implications and benefits. Novated lease tends to be the least benefit. This is part because of the way the fringe benefits tax is calculated. However, when you do an owner lease to your company, there won't be fringe benefits tax, and we would lease the car to the company. They would pay you a fee for that, and you'd be entitled to deductions. You would also be entitled to claim the GST benefit if you were registered for GST. And so this would be a far better result than doing a novated lease. But it is a complicated set of circumstances and needs comparing of the cost of the car compared to the wages you're on, and even compared to the business usage might give us better alternatives that we could use under a novated lease. So it is complicated, as you can see.
Okay.
You need to speak to a specialist.
Sure, I understand. But let's say in general, when I look at the novated lease documents, it says, of course, pre-tax and post-tax, and at the end, normal people, individual KYGs, they look at it and say, okay, how much the net income I'm taking home. Okay. That's the last thing. Everybody wants to know how much money they're going to be entitled to.
Well, in lots of cases, the owner leasing approach can give you better return of more disposable income to take home and spend. However, you will find that companies prefer the novated lease for a number of reasons of the way it sits on their balance sheet, and it has special shareholder benefits, and that's why companies like that as compared to you having an owner lease.
It's just because the normal PAYGs, if somebody just use their car to go from home to work, obviously they cannot claim any of that for their tax because it wasn't for running a business stuff. So some argument is there that they think, okay, this way I can't claim it if I buy it myself or finance it or whatever. But if I get a novated lease, as soon as they see pre-tax, that means they think that, of course, they're going to save some of their tax money. Is it true?
It can be, but majority of the times we're talking about $100, $300. This is because people will buy higher cost value cars, and the FBT works in a lessening way the more expensive the car gets. If you're doing this with a low cost value, then the benefits can become a lot more. So that is the important issue to compare when you're looking at fringe benefits tax in cars.
So it depends on the value of the car and the taxpayer's income.
Correct. It is a big value issue in the calculation.
Yeah. Well, so it's one of those equations, too many variables. So it has to be worked out individually.
Yeah. So. One benefit could be, for example, is asking your boss to turn around and salary sacrifice for you maybe a second-hand car for your son who goes to uni or your daughter who goes to uni, these types of things. Or other people in the family that wouldn't otherwise have a car, and if the cheaper the car is really fantastic for uni students, you're actually getting a tax effective deduction out of that. Obviously, you would still buy them a reliable car, but try and keep that cost value down.
Very interesting. Great advice. Great advice. Okay, thank you so much. And of course, if you want to have more details and find out how does it work for your circumstances, of course, get in touch with Steve. He'll work it out for you. That's part of the tax planning we were talking about.
This is all tax planning. I'll certainly give you a report, and I'll go through about what you can expect, what you can't expect, what the costs are to you, so we make sure that the benefit outweighs the costs, obviously. There's no sense in doing it.
That's right.
And we take it from there.
Great. It's all about comparison.
Comparison.
That's it.
And improving that lifestyle.
Yes, that's right. Thank you so much. It's
Thank
great.
you.